Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So this is a huge week for the markets. Number one, tomorrow, Tuesday morning, GDP for the second quarter, the first number being released will come out. So again, GDP Tuesday. Wednesday, we have ADP private sector numbers, as well as the Federal Reserve announcement on interest rates and commentary from Jerome Powell. Then throw in Meta and Microsoft earnings after the close. Thursday, you get PCE data, jobless claims, as well as Amazon and Apple earnings after the bell. And of course, leave it to Friday for the non-farm payrolls report. So what does this mean? It means get ready, hold on to your belts here. We are going to have a wild trading week, and that to me is great for opportunity, right? Opportunity comes from volatility if you're a trader. So let's go into the markets. And obviously, we're coming off of a morning here where yesterday we heard about a European trade deal being done. And so the stock market last night at 6 p.m. opened higher substantially. We kind of ground higher, and then really in the overnight started to sell off more and more. And we've now come quite a bit in considering where we were. So again, what I think is interesting about this, guys, is that every trade deal that is announced, you're getting diminishing returns. Part of that is the fact that the stock market is higher each time. And so the higher the stock market goes, ultimately, it's harder for the next deal to one-up it and get that same bang for your buck. And what that tells us is the market is getting a little bit tired. Doesn't mean the market's ready to reverse, but it just means that, again, good news is having less and less of an impact. In addition, we obviously have commentary from the Federal Reserve and the interest rate decision. There's a lot of things that likely will make traders kind of think twice about getting too involved on the long side of this market until we get to the later sessions of the month, or really the month at the end of this month. All right. So again, futures are trading up. If we look at where we closed on Friday, you can see again, we are trading higher on the day, but quite a bit off of the recent highs. If we go to the daily chart on the S&P, we can see this kind of continued grind. And obviously, I want to put in all of my key trend lines that I've been watching with you guys. This has been one of the key ones where, again, this tells me that while the market is not ready to break down, we've broken that last key trend line of support, which puts it in a position of weakness. Now, again, you might say, well, it doesn't sound like it's weak because we're going to open higher today and we've been grinding up pretty much every day. That's true. But ultimately, it means that if we start to fall, there's really not a kind of a support level below there, right? As opposed to when you were here, and here you had support levels from the lowest point on April 7th that could kind of protect the market. And so I guess my point being is that while the markets obviously are not rolling over, just be aware that if it starts, it might be a significant rollover because there's no major support underneath in the near term. Really, I would see first support as being right in here around 6,000 on the S&P, which currently, again, is about 400 points lower. Now, listen, we've gone up massively. A 400-point correction wouldn't be huge, but it is, again, that would be kind of in that 7% range, which, again, would be a solid correction for me as a technical trader. A couple other things that I'm kind of taking note of. If you look at a couple other trend lines that I've kind of kept an eye on, notice right here, we have this trend line pivot point to pivot point to pivot point, and the S&P 500, look at how this line and this line merge right up here around 6,440. Now, again, we closed around 6,390 on Friday, but we're going to be opening higher. Is there a chance we push up into this dual level of resistance? I do think that is a possibility. And one last thing I wanted to point out to you guys, take a look at the low from October of 2023 to the April lows. And if we do a parallel on this, look at this. We have a parallel perfectly with that major low pivot and the April 7th low. And if we stretch it up to the all-time previous high here, look at what we get. We get that same level of resistance. And so again, I'm going to be watching the S&P today to see if we rally up into this level, how the market reacts. Do we start to sell off? Do we come back in? Things like that will be on my radar. All right, so quick kind of go over of the key things that I'm watching on the S&P. And remember, as a technical trader, my job is to find resistance when the markets are going up And when the markets fall, I find support. Where is the market going to bounce when it dips down? That's, again, how you look at a market from a technical perspective. All right, so again, a few other things here. Let's jump into some other charts. The US dollar, again, catching a little bit of a bid. Look at this nice little wedge that we had broken out of recently on the US dollar. Again, you could very clearly see that you had a starter point here. And what's interesting is, look, if you extend this out, this kind of goes right into this area here, right into these lows here. But again, taking a look here, we had multiple hits all along this line. We broke above, and then what do we know about support or resistance? Once you break resistance and confirm, notice here's confirmation. Close above, confirmation. This becomes major support, and the chart does come back to the scene of the crime, which is very standard, and then it turns back around, and it likely will head back a little bit higher. So keep an eye on the US dollar. The dollar is strong today on the back of the European trade deal. The 10-year yield isn't doing a whole lot, most likely waiting for the Federal Reserve on Wednesday with that big Fed decision. And again, remember, no rate cut is expected, but it's all about the guide. Is the guide still saying September? Are we going to hear from Jerome Powell that September is going to be that cut? Or is it going to be later in the year? This is going to be key. And also remember, the president toured the Federal Reserve building, kind of got in a little bit of a spat with Jerome Powell. They were arguing a little bit. Ultimately, though, again, it sounds like Trump once again is going to pressure Powell to cut, but it doesn't sound like it's working to cut rates, especially, to be fair, the economy, unless we get some really bad data, the economy is not leaning that way towards a ton of weakness. In fact, I would argue it's almost looking like it got a little stronger in the last month or two, probably from the wealth effect in the stock market, helping consumers continuing to spend. All right, let's look at Tesla. I wanted to touch on Tesla as, again, it had that big drop last week on earnings, then it kind of recovered. Notice that even with that big drop, you're basically trading within a continued wedge pattern. And remember what wedge patterns tell us, right? So wedge patterns, essentially, they tell us that price is consolidating. And when I say consolidating, it starts out with the biggest move, then a little less, then a little less. It kind of gets stuck in this wedge or triangle pattern. And then as it gets to the head of the wedge here, it starts to build pressure. And again, think about you're compressing price. Essentially, you're compressing a spring. And the idea is that when you get in one of these patterns, you don't necessarily know which way it's going to break always, but whichever way it breaks, you get a big move in that direction. And so again, if Tesla breaks to the upside, it would likely be a big move up. If it breaks to the downside, you're looking at a big move to the downside. But right now, anyways, we are holding within this wedge pattern. It could continue in this wedge pattern in the short term, and then we'll have to watch and see which way it breaks. Now, there is such a thing as a bull wedge and a bear wedge, but again, in terms of this chart, I don't have a great read about which direction it's going to go, although I would say from a fundamental perspective, you will get some robo-taxi news more and more later this year, and we'll have to see how that all reacts. Palantir. Palantir is an interesting one. It looks like it's going to be opening a little bit higher today. Extremely, extremely overbought. But again, it is running into some key trend lines here. So again, if we look at short-term resistance lines, and this is going to be one that I look at as a day trade today, I'm keeping a close eye just up here around 62, a pierce of 62, as again, we have a short-term wedge pattern, a parallel channel. And the parallel channel, notice how every time you hit the high end, you get a pullback, pullback, pullback. And then the idea is here would be another pullback. And again, this is more of a day trade, although I do think on a swing trade basis, it's also very interesting. But 62 today, I'm going to look for a pullback on Palantir. Again, overbought to the nth degree. And again, we are seeing even some negative divergences on this chart. And again, the valuation makes no sense, but then again, it hasn't made sense for a long period of time. But now on a technical basis, we'll keep an eye on that 162 level. Later this week, we'll get earnings from Microsoft. If Microsoft holds where it's currently trading, the odds will favor a pullback. Notice again, this longer term trend line. where again, same thing. Every time we've hit this line, it's been a major pullback in price. We double tapped it here. So we kissed it here. We pierced it here. The idea is if everything holds to history, and that's what technical analysis is, it's showing us the psychology of investors, then we should be due for a bigger correction off of this level here on Microsoft, potentially starting with earnings after the bell on Wednesday. Meta also has earnings after the bell on Wednesday, folks. This is a chart that has hit double top, so that is a key resistance level there. And then what we're looking at here is on a shorter term basis, the potential for a head and shoulders formation. And again, it's preliminary, meaning it's only just forming. But again, if we continue to kind of pull back near term, shoulder, head, shoulder, this would yield a move to the downside. We can do a measurement on the target should it trigger. You take the high of the head to the neckline. You would take that distance, and wherever it breaks along the neckline here, you map that out, and it gives us an approximate $635 target. Now, again, on earnings, we'll have to see. Maybe if it pops on earnings, it negates the head and shoulders. You can negate a head and shoulders and the power that it has by taking out the high of the head. So essentially that head is monumental at around 750. If price trades above that, it would negate the head and shoulders pattern. The bear flag on Bitcoin continues to chop here and trade within. Amazing, because on Friday, we were trading substantially lower, and then it was rescued back inside of that pattern. Then over the weekend, we hit the high end, and now it's pulling back today. So amazing to follow this. Again, keep in mind that the power of this is right here. So again, you think about pattern formation as an entity, supernatural entity, whatever, but essentially its power comes from the high of the topping tail. If the high on the topping tail at approximately 123, 200 to 300, if you take that out, then this becomes a very bullish setup for a move up, probably north of 130. If it can't take out that high, then the topping tail, which is a bearish reversal signal that the bear flag has formed off of, then it holds its bearishness, and you would favor probability-wise a move to the downside. Let's take a look at gold. Gold has broken lower here and continuing to trade a little bit lower today. As of now, this is looking to see if it can confirm a breakdown. As of now, we wouldn't confirm, but nonetheless, I'm going to keep an eye on this. And the idea is if we confirm, the odds for a move down to at least here, former pivot high, pullback breakout, retrace right there. So that tells us there's support right there at 31.50 on gold. That would be first target of support. If we were to get through that, and well, obviously there's no guarantees that we get through that, but if we did, you would do your parallel channel down here, and that would give you your secondary target around 3,050 to 60 on gold. But right now, I'm not going to worry about second target. We haven't even confirmed a breakdown yet. Silver, I've talked about how silver, again, has this longer-term upsloping major trend line. As of now, this is still the line to beat. Impressive. Here it hit, reversed, it re-hit again, and now we've had another pullback on silver. I like silver mid to long term, but the chart is always in charge. Remember that, and therefore resistance is still key here. So again, this 39.30, 39.20 area, essentially you need to get above this and confirm, and then I think it goes into the mid 40s, even possibly retesting that $48 to $50 level. But until then, respect the line, guys. Respect the key resistance. Pullback, where would first support be on a pullback on silver? You would go to your former kind of consolidation area here, right around 37.20 to 37.15. All right, oil is up next, and oil is getting a nice move up today. So again, good rally, but look at where it's gone right back to, the underbelly of the bear flag. So keep an eye on that. Short-term resistance is 67. I gave that level to you guys last week as resistance. To negate it, we would need to close and confirm back inside of that, because we, again, confirmed below this level. Actually, interestingly enough, you closed here below. Let's zoom in. Closed below, didn't confirm, didn't confirm, didn't confirm, and finally confirmed. And therefore, this becomes major resistance, and we must confirm back above to negate it. So again, something interesting to watch. As long as we don't confirm back above, the downside level of 60 would be your next major support, with minor being around 63.70. Lastly, natural gas here. Let's take a look at this here. And I got to type it in correctly. That would be the best. There we go. Nat gas again. Notice how, again, we had this nice little support area. We broke below, hit secondary support here, rallied back up, now came down, and we've closed below, but haven't confirmed, but are now forming a bear flag. So again, bias would be slightly negative here, not overwhelmingly negative because we haven't confirmed yet, but secondarily, we could see your next support would be the 299 level. 1, 2, 3, that would be your fourth hit, which would yield a 50-50 chance of a break below or a bounce back up. And then here would be your big support at 263. All right, so 263, that would kind of be the one that I would probably look to buy. I know it may not get there for a while, or who knows ever, but ultimately my job as a technician is to always look at the levels with the highest probability of success. So there could be a level that's 50-50, even 60-40 chance of a good move. And I may say, meh, that's not that good, right? I mean, that's slightly better than gambler's odds, but I really want those high 75-80% success rate, where when you analyze the chart correctly, when you use the methodology that I teach and that I go over in these videos, you really can get your win rate up to 75 to 80%. Again, that is the key metric where, again, the pressure starts to alleviate and you start to go into essentially autopilot. And autopilot yields, just take the trade if it matches the criteria, leave your hearts and your feelings and your gut out of it. That doesn't really do us any good as a trader. We have to just focus on the data and the charts. And that's why, again, our motto here at Verified Investing is no BS, just charts. The charts, again, keep us on point with a high win rate, not perfection. There's no such thing as perfection, but a high win rate. It's when we focus on the hype and the narratives and all this other nonsense. That's where we get skewed and we start buying at highs just before reversals and buying, or shorting at lows just before the dump out, or selling at lows just before the rally, I should say. All right. On that note, guys, I'm going to bid you farewell. As always, thank you so much for being supporters here of Verified Investing and Technical Analysis. It's what we live for here, and we hope you learned something today. Have a great one. Thank you so much. Take care.